Good morning, folks. So let's see what the week has done for us. So I'll start with Monday's headlines. So after the fall in the equity markets in India, which is almost a headline every week, last few weeks. So it says Sensex at a discount to Dow Jones for the first time since 2009. Okay. So we've been running at a premium valuation all these last few months as compared to the US, as compared to most other emerging markets, and now after the fall we are cheaper than the Dow, which is good if you are buying, correct? So if the Dow is trading at a price earning multiple of 22.4 times, okay, we are India is trading at about 21.8 times, and honestly, given the earnings growth comparison between the two countries, we do have a higher rate of earnings growth. So being cheaper than the Dow and a higher earnings growth makes that more attractive for us. Okay. Then on the side, we also have a headline says Mahindra and Mahindra at number 2 as far as the hybrid and as the EV cars. I don't have hybrids yet, but the EVs are doing pretty well, and it's been quite a rapid pace at which they have moved to the number 1 slot in India as far as the EV sales are concerned. And much of it is fresh from the scratch design, which goes to say a lot about what Indian companies are learning to do as far as design and engineering goes. Okay. Then we have a headline which says, I don't think it is time to start buying Indian stocks. Okay. Right after we said that we are cheaper than the Dow, inside we have a very well-respected economist and manager by name Louis Vincent Gabe, who's based out of Hong Kong. I respect him and follow him a fair bit, and he was in India recently. So he thinks that as long as the selling continues by FIIs, it is not yet time to buy Indian stocks. Okay, he thinks the fourth quarter is when the selling may subside, and that is when it's a good time to buy. At the same time, he says, in the short term, India might face some continued pressure, but the structural story remains intact within the EM pack. And China is a cyclical story, Brazil is a valuation story, and India is a structural story. For a long-term investor, a structural story is important. So India is right there on top as far as this is concerned. But let's not forget about what he's saying about China and Brazil. Both are good stories if you want to diversify outside India. Okay. And then we have something about China. A first in a year, China inflation turns negative. Is that good or bad? On the face of it, people may think that having a very low or negative inflation is good, but no, it's bad. So if asset prices are falling, there's no incentive to invest in assets. So that slowly drags the economy down and down. So the entire focus of China now, the Chinese government now, is to bring spending back, bring consumption back high, so that inflation can be brought up from a negative to maybe even 2%, which would be a good thing. So Chinese growth has been faltering after the real estate crisis that it had a couple of years ago. And given that most Chinese had investments in real estate and that failed, their confidence is at an all-time low. They've just been saving the money, they've not been investing anything, but of course they've been buying some gold. So any move to boost consumption and bring asset prices back is a good thing. It will bring money out of their bank accounts into the market. Even the recent DeepSeek revelation has come as a boost to the Chinese stock markets. There's a confidence again that they're doing well. Of course they're doing well. Many of the Chinese companies are doing far better than the European or American peers. Okay, Baidu is a case in point, where it's doing far better than Tesla actually in number of sales and even technology, I believe. Okay. So, all right. Wednesday's paper speaks about silver. It says, after a steep run up over past year, buy on dips. This is what a few money managers have to say about silver. So silver is back in the focus, not just this year, last year onwards. It has had a wonderful ride up. But let us remember that silver is far more volatile than gold. It is, if you're looking at the number of negative years, silver is double the number of negative years as it has been for gold. So anybody buying silver have to keep that in mind, that it's much more volatile than gold. But if you look at the gold to silver ratio, it does look that silver is looking more attractive today than gold price wise. So yes, as most of the money managers saying, it's a good time to buy silver as long as one is mindful of the volatility. And even in a recent conversation and interview with Louis Vincent Guy again, he was more bullish on silver than gold, given the price run up of gold. So relatively silver is cheaper, plus the industrial use and the industrial demand for silver. So if you believe that the Chinese economy is going to be picking up, then you can also believe that the demand for silver would be going up. So that's about silver. And then we have Thursday's newspaper has some good news. While the Chinese inflation was negative, India's inflation cools to 3.61%. Okay, food prices cool February inflation to 3.61%. For us, it's good. Okay, so we've been struggling with not very high inflation, but higher than what we'd like it to be. And most of this inflation was caused by food prices. So we had a very irregular food supply, and because of that, food prices remained high. And with the better crop and of course the higher base of last year, we see that the lower food prices have brought down the overall inflation down to 3.6%. Let us remember that RBI wants to keep inflation between 4 to 6% band. So we are well there in the band. So the headlines say that food inflation fell sharply from almost 6% in January to 3.75% in February, making the mildest uptick since May 2023. Thanks largely to a year-on-year contraction in prices of vegetables. Okay, but edible oils, on the contrary, have gone up, and that could be because of the depreciation of the rupee. Much of the edible oils are imported by India. Palm oil, as a case in point, we import. So with the rupee's depreciation, we have to pay more for these imports. That could be one reason why the edible oils spurted higher by 16.36%, while other fruits and vegetables came down. Okay, so once inflation is lower, the Reserve Bank would have greater confidence to bring about a interest rate cut. So the only thing preventing the Reserve Bank from making aggressive rate cuts, one was inflation, and second was the relative currency strength versus the US dollar. Okay, so and the US Treasury yields. Now, as US Treasury yields come down and the gap between US yields and Indian yields increase, the RBI would be motivated to decrease interest rates and help growth. Indian growth has been faltering a bit, so it would be very good to have a lower interest rate here. Okay, though of course last week, as I was also mentioning, it would be a shallow cut. That means we can't see deep cuts, nor would be long cuts. Okay, for long times. Blackstone is the world's largest asset manager with more than $1.1 trillion in assets. That's a huge number. So when their CEO was here, he says, India well placed to tackle Trump's tariff volleys. Okay, so that's because the percentage of GDP which is exported to the US is very tiny. So we are not likely to be as impacted by tariffs as some of the other exporting nations are. Okay, that's good for us. While there may be sectors which would be more hit, but largely as an economy, we would not be hit so much, has been the consensus view. Okay, and in India, out of the $1.1 trillion of assets they manage, $50 billion is invested in India. They're also the largest real estate owner in India, by the way. Okay, then we come to today's newspaper. And we have a very unusual headline: climate risks. RBI moots common pool of projects. So this whole thing of climate risk is slowly coming up to the front of the mind for everybody. It's a real risk that we are facing. And the one reason that we have been seeing such irregular food supplies is because actually climate change. Okay, because of irregular summers, irregular monsoons, our crop patterns have also got impacted. So it's high time that we all looked at it seriously. And the RBI is of course talking about it from the financial sector point of view. Good for all of us to be mindful of it. Then LG, the South Korean consumer major, gets a SEBI approval to float a 15,000 crore IPO. Okay, after Hyundai, which was the largest IPO, now we have LG coming out with a bigger IPO. Okay, let's see. There's nothing about valuations yet. Hyundai came out with a very high valuation, which was not at all making it attractive for anybody to invest in the IPO. I hope that LG is going to be more investor friendly than Hyundai was. Then, of course, going further inside, the headline which says, whether US is heading for recession or just detox, downturns are costly, is what the US Commerce Secretary Howard Lutnick seems to be saying. He says that a recession would be worth it to get the US President Donald Trump's policies working and economic policies in place. Okay, so none of the data seem to be pointing towards a recession. If you're looking at employment, you're looking at inflation, they're all seeming to be earnings growth so far, they're all fine. But it's only the pessimism about the immediate future that is bringing about the talks of recession. So the article says, nothing in hard data like unemployment, GDP or consumer spending currently suggests that it is happening. The conversation is in the air because of recent surveys showing declining business and consumer sentiment. Okay, so yes, I mean, all of us have been reading the news. We can understand that there's a lot of negative sentiment. Okay, let's see what happens. The stock markets are sort of factoring a 22% chance of a recession. Okay, whereas the bond markets, the US Treasury markets, are factoring almost a 48% chance in recession, whereas the corporate bond markets in the US are hardly factoring any recession. Hardly an 8% factor. So depending on whom you choose to believe, there's a recession likely to happen or not likely to happen. Here there's only probabilities, and these could change very, very quickly. Let's keep it in mind. It doesn't mean that we are about to be facing a recession in the US. Okay, so that is what we have to say for this week. Good day. Have a good weekend.